Did you know the government helps boost your pension contributions through tax relief? I'm Charlene Young, Senior Pensions and Savings Expert at AJ Bell. In this short video, I'll explain what pension tax relief is and help you make sure you're not missing out on what you're entitled to. How tax relief works depends on who is paying into your pension. Let's start with money you pay in, known as personal contributions. Pension tax relief is the government's way of rewarding you for saving for retirement, and it can make a big difference to the value of your pension savings. You'll get it on your personal contributions if you're a UK resident and you're under the age of 75. When you pay into a SIP, short for self-invested personal pension, or a ready-made pension, we'll reclaim basic rate or 20% tax relief automatically from HMRC. This is paid directly into your pension when we receive it. Depending on the date you made your contribution, this could take around 7 to 11 weeks. For every £800 you pay into your pension, HMRC adds £200, meaning the total contribution into your pension becomes £1,000. The amount of tax relief you can claim is limited by your UK earnings. You cannot usually pay more into your pension than you earn each year. Earnings include your salary, any bonuses, or your profits if you're self-employed. Dividends or property rental income or savings income do not qualify as earnings for the purposes of pension tax relief. Paying 100% of your earnings into your pension is an extreme example, but if you earned £50,000 a year before tax, you could pay £40,000 into a pension, such as a SIP, and this would be topped up by tax relief to £50,000 in total, your earnings figure before tax. If you pay more than 20% income tax on your earnings, perhaps because you are a Scottish taxpayer or you pay higher rate tax or additional rate tax in the rest of the UK, you're entitled to even more tax relief. But you'll need to claim this extra relief yourself. It is not paid into your pension automatically. If you already complete a self-assessment tax return, you'll need to include your pension contributions on your return to make sure you claim the additional relief you're entitled to. This figure will include the automatic 20% basic rate tax relief we have claimed for you. If you don't usually have to complete a tax return, you can claim the extra relief directly online from HMRC. You'll need your pension details and national insurance number to hand. You can also write to HMRC, although this will take a little longer. This means that if you pay income tax on your earnings at 40%, getting the £1,000 into your pension in our example earlier could cost you as little as £600. To do this, you'd pay in £800 and HMRC will top this up in the pension to £1,000. Then, as a 40% taxpayer, you can claim an extra £200 in tax relief from HMRC. This lowers the cost of the contribution to £600. You'll either get the extra relief through your tax code adjustment, a tax refund, or an adjustment to your tax bill for the year. Even if you don't have an income, you can still get some tax relief on pension contributions. You can pay in up to £2,880 a year, and HMRC will top that up to £3,600. Your employer can also get tax relief on the money they pay into your pension. They can claim the cost of a pension contribution for their employees as a business expense, which reduces their taxable profits. The employer tax relief is not paid into your pension, but it offers an incentive for companies to make extra employer contributions, which you'll benefit from. Unlike personal contributions, employer contributions are not generally restricted by your earnings. We've talked about the earnings limit for tax relief, but you also need to consider the annual allowance on what you can pay into your pensions. For most people, it's £60,000 a year, and this covers everything paid into a pension by you personally or on your behalf, such as employer contributions and that automatic 20% government tax relief top-up too. Your annual allowance could be lower if you have a very high income or you've already started to access your pension. You'll face a tax charge if you go over your annual allowance for the tax year, so it's worth keeping it in mind. Let's summarise what I've covered in this video. SIPs and ready-made pensions will claim basic rate 20% pension tax relief on what you pay in automatically. Higher and additional rate taxpayers must claim extra tax relief directly from HMRC. If you have no earnings, you can still pay in up to £2,880 a year and get tax relief. Your employer can also get their own tax relief on the money they pay into your pension. The standard pension annual allowance is £60,000, but can be lower for some people. If you go over your pension annual allowance, you might have to pay a tax charge. Tax relief can make a big difference to your pension pot. I hope this video has helped you understand what you might be entitled to and how to make sure you're claiming it.